Hello, my people. Welcome back to this channel. It's your boy Mayor the Peeps Kuda. How you doing? How you doing? Been a while. So in today's video, I'm about to cover some content or some content on the table, and we have support and resistance, understanding market structure, trend lines, and how to draw them, what to expect at support and resistance level, hints to drawing support and resistance, why support and resistance level are important. So we have about six um topic here to talk about, but due to time limitation, I will need to cover just 2 to 3 topic, then complete the rest in my next video. So before I proceed, I want you all to understand that support and resistance is also a strategy. It's a very, very, very powerful strategy. If you can map out your support and resistance very well and clear, you make a lot of money from that level. So support is just in a lowman explanation, or a lowman understanding. Support is an area where something bounces back to the upside. And while resistance is an area where something bounces back to the downside. Let's say something is going up, it bounces on a particular surface or a particular area and then go back to the downside. That is resistance. And then support. Support is where something bounces from the downside to the upside. That is support. So let's move further. So what is support? Support is an area of value at which demand, that is buying power, is strong enough to prevent price from further decline. So the support area is also known as the demand area. As you can see on my picture on my screen, we have a support area here. You can see how price traded into that support area, bounced to the upside, came back to that same support area, bounced to the upside, came back the third time to that support area, and still bounced to the upside. So you can imagine how much a trader could have made around that area, trading while trading support and resistance as a strategy. So we proceed. The psychology behind support. During a sell-off, that is a period where price has been falling down, price falls to a certain level that it becomes cheap enough to attract many buyers entering the market. Also, at this price level, sellers who have been in the market begin to close their positions for a profit. This double edge action then begins to cause price to start bouncing back up from this area called support. So, just as I have explained, that is support for you. Now, what is resistance? Just an opposite of support. Resistance is an area of value at which supply, that is selling power, is high enough to prevent price from rising further. As you can see on my screen, you see how price traded into the resistance area, boom to the downside, traded again to the resistance area, boom to the downside. So the area of support is called demand area, and the area of resistance is called supply area. So those of you that studied economic, you have supply and demand in economic rather. So the psychology behind resistance. During a rally, that is a period where price has been rising up, price peaks to a certain level that it becomes cost enough to attract many sellers entering the market. Also, it at this price level, buyers who have been in the market begin to close their positions for a profit. This double edge action then begins to cause price to start bouncing back down from this area called resistance. So this is as simple as ABC. The only issue there is for you to know how to map out your support and resistance, which is very simple. And I'm going to take you guys to live chat. I'm going to take this video to live chat so that I will map out my support and resistance on my live chat for you to see and also confirm from this diagram and what I will map out on the live chart. So let's move in to the live chart. Now, this is my live chart USD card as the United state dollar and the Canadian dollar. On my daily time frame, we have a lot of support and resistance here. Remember, in my previous video, if you have watched it, I talk about top-down analysis and technical analysis. And in that video, the top-down analysis consists of making your analysis from higher time frame. Top-down analysis talks about making your analysis or having your analysis from the higher time frame for you to be able to have a bigger picture and to be able to see the left side of your market. The left side of your market carries the historical market data. The left side of your market carries the past data of the forex market. So, with the help of your past data, you would be able to understand where your current market price is trading to, where your current market price is about to bounce back from. So that's it. Your bigger time frame helps you with a bigger picture for you to understand how to map out your point of interest and also um how to break down your point of interest for a lower risk and then a higher reward. So that's it. And also I will add to this video about candlestick. You should know and not to be confused anytime you come to your live chat like this and then you find something like this area, this tiny body or this tiny level, they are called wicks. And then this thicker one is called the body. So anytime you find a candlestick like this, let's say you find a candlestick like this, wait a minute. So you find a candlestick like this is the body, and then these are the wicks. These are the wicks. So those wicks are the liquidities that the market will eventually hunt. You understand me? And also, if you want to map out your support and resistance, you do not map it out with the entire wicks. Mapping out your support and resistance with the entire wicks will make you risk more, and then at the end of the day, you end up blowing your account easily. So, for you to map out your support and resistance accurately, you will go down to your line chart. Now, this line chart helps you give you the edges of your support and resistance, a clear edges of your support and resistance. On this video, I'm about to show you. So, this is my line chart, and I want to draw my resistance area. I have a resistance area from here. Now, you see how tiny this. Okay, now let me take it back. Let me take this back. Let me say I want to draw my resistance here, or a beginner trader that wants to draw his or her resistance will want to cover all these wicks. Yes, this is how initially I have been drawing. This is how I used to draw my resistance and my support initially when I started trading. But as time goes on, I found out that the best way to draw your support and resistance is to use your line chart. Your line chart will help you. Your line chart will help you draw your support and resistance accurately and neatly. So you see how big this. You see how big my resistance is, because I am drawing including I am including my line my wicks. So now let's go down to the line chart. I pick my rectangular box. This is my area of resistance. It's my area of resistance. Now let's go back to the candlestick chart. Now see the difference. That is the difference. Now, you have your resistance, and then we have support here. This is a support. This is a support. Now, notice how market traded into this resistance area, bounce back to the downside. Agree with me, if you agree with me that this particular area was respecting this support level, this area that market reversed back to this resistance was respecting this demand area. So you see how powerful support and resistance can be. So this is how to draw your support and resistance. If you want to draw your support and resistance, use the line chart. And also, I want to add to this video, if you are a new trader, you are a beginner into this community, into this business, you need to understand that learning many strategies is not the best way to trade the financial market. So if you want to focus on support and resistance, let it be support and resistance for you. If you want to focus on SMC, let it be SMC for you. If you want to focus on ICT, let it be ICT for you. You understand me? There are a lot of strategy out there. So also do not let it confuse you when you come across what they say Malaysian S&R. Malaysian S&R is the same thing as support and resistance I am talking about right now. Malaysian S&R is Malaysian support and resistance. So it's still the same thing as support and resistance. And the reason why you should use line chart to draw your support and resistance is that, let's say for instance, this market traded to this area. This market traded to this area and broke this level with a candle body. Let's say this market traded to this area and broke this level with a candle body. And then after breaking this level with a candle body, it bounced back like this and then reject this area, continue to the upside. Now you should know that this resistance is now acting as support. Resistance acts as support when a price breaks the resistance to the upside and then bounce back to retest that area for a powerful push up to the upside. And now this level, this area that was resistance before, has become support. Same thing applied to this downside. When this price breaks this support level to the downside and then bounce back, retest the previous support area, and then boom to the downside, that level has become a resistance area. So there are a lot of things for you to understand in between that will help you to trade support and resistance perfectly. So in this situation, in a situation where you have this this resistance area, and then you notice price is coming to that resistance area, you need to wait for a clear confirmation before you trade. If you are waiting to sell from your resistance, you need to wait for a clear confirmation before you trade from your resistance level. And this is a very nice confirmation. Rejection at that area gives you the confirmation that this market is about to go down. Same thing as support. If this market trade to the support area and then gives you rejection, then you are ready to buy. The market is about to go up. I will do well to talk about more confirmations for you to apply before selling or buying from each of these areas. So that's it for support and resistance. That's it for how to draw support and resistance. Now, understanding market structure. The market has basically three structures: uptrend, downtrend, and ranging market. So I will still need to go back to the live chat, or I can, on my diagram here, I have some example. So this is an uptrend market, a bullish market as well. The bullish market, in bracket uptrend, is a market characterized by a series of higher highs and higher lows. On our chart, see figure below. As you can see here on this image, this is a clear example of a bullish market. Bearish market. The bearish market, also called or known as downtrend, is a market characterized by a series of lower highs and lower lows. As you can see on the diagram, this is a clear example of a downtrend market. Ranging market. The ranging market, aka sideways market, is a market characterized by a series of highs and lows, approximately on the same level. Approximately on the same level, no breakout. They are just ranging in the same area, as you can see on this diagram. So if I should take us to the chart again, all right, okay, I have an area of ranging market here, right here. This is an area of ranging market right here. So in this kind of scenario, you are not advisable to trade. You wait for a better break of structure, either to the upside or to the downside, for you to be able to consider buying or selling. So bullish market. This is a bullish market. That is a bullish market. You can see we have a high here. We have a high here, and the high was broken. We had another high here, and the high was broken. That is why it is called higher highs and higher lows. So that's it. So for the downtrend, this is a downtrend market. This is a downtrend market. So that is so simple. That is they are very simple to identify. You just need to understand the structure of the market. So after watching this video, you can go back, do your research about all these things I'm talking about, for you to be able to understand more. You have your jotter, you write some of your things down, or you put them on your cloud for you to be able to remember and then look into them later. So that's it for market structure. So the next one is trend lines. How to draw the support trend line. To draw the support trend line, you connect at least two successive higher lows in the trend and then the line accordingly. So like I have it here on my picture, you can see how the trend line is being drawn. And also, trend line is also a strategy. There are some traders who trade trend line strategy. So they base on only trend line strategy. So they make a lot of money from trading trend line strategy. As you can see how market bounce to the trend line, move to the upside, bounce, respected the trend line, just following the trend. The market is respecting the trend. So when you have a case that this market breaks out this trend line to the downside with a candle body, not a wick, with a candle body, it it indicates a massive sell to the downside, because this is an uptrend market. When you have when you are in a situation where the market breaks to the downside with a large candlestick body, it gives you a notification that the sellers are in the market. So what you have to wait for is a retest, a little retest to this trend line, just as I explained on the support and resistance, that resistance becomes support and support becomes resistance. So when you have a breakout to the downside on this trend line, you should be notified that, or you should believe that the sellers are in. But to trade with a confirmation, you do not rush into the market just like that. You wait for a retest. And now when the retest occur, and the retest occur to this trend, back to this trend line, and then gives you some rejection, then you can consider selling from there. And then that's it for trend line um strategy. So downtrend, or how to draw the resistance trend line. To draw the resistance trend line, you connect at least two successive highs in the trend and then project the line accordingly. Now let's go to live chart. Let's see, we have something here. Let's move down to the 4-hour time frame. Moving down to the 4-hour time frame, let's look for a level where we have, okay, this is a resistance trend line. So let's get the next one, the support trend line. So this all for the resistance trend line. That's how to draw it. And also you can use your line chart to connect it accurately. So that's all for the resistance trend line. Let's look for a support trend line. All right, we can use this area. This is a support trend line. As you can see, boom to this area, boom to the upside, boom to this area, boom to the upside, boom, broke the area with a candle body, boom, we tested this area, boom to the downside. So that's it for trend line, support trend line and resistance trend line. And like I have explained, support trend line is also a strategy that you can use to trade the financial markets. So what to expect at support and resistance level? I will be ending this video here and I will continue from this particular topic in my next video. Due to time, I will be ending it here. So thanks for watching this video. Subscribe to my YouTube channel. Send me a comment. If you have any message, you drop on the comment section. Do not forget to like and share. Peace out.